I love markets, right? Like, news happens every day, stocks move on the back of that news. Yeah, I guess that's why I'm still involved 25 years later.
I'm Jennifer Devine, and this is the Successfou podcast. Caroline Bradley is a major force in the hedge fund world. She's a founding member of Fifth Delta, a global equity market-neutral hedge fund that launched in 2020, right in the middle of the global lockdown, with a staggering $1.25 billion in assets. Today, she oversees investor and counterparty relations and sits on the executive committee. Her journey started straight out of uni at University College Dublin, landing a spot at Goldman Sachs as an analyst, one of the biggest names in finance. Over more than a decade, she navigated hedge fund strategies and capital markets and then made the leap to Citi, where she handled some of the largest leveraged accounts in the business there. She's a CFA charter holder and also a non-executive director at Celica, a UK private equity firm. So stay tuned. This episode is packed with insight and inspiration from someone who's mastered the high-stakes game of investing. Please join me as I welcome Caroline Bradley to the Successfou podcast. So, did you always want to be in banking, investment banking? Like when you were 15, what did you want to be?
Actually, no. Finance was not in my family at all. My father was a vet, and my mum had worked in hospitality, but as was typical in that era, became a stay-at-home mom. I knew I didn't want to do that, and for the longest time, I would spend a lot of time with my dad in the summers, working with him, and genuinely thought I would go follow his footsteps. But he was dealing with very sort of large animals, and we grew up in Ireland. The weather wasn't great.
Lots of horses, cows.
Correct, all of that. And I mean, he loved it. But I think as time went on and I recognised, one, how hard he had to physically work, and notwithstanding Irish weather not being the best, I started getting very interested in more broad-based subjects, particularly business, languages and the like. And my interest started to shift in that direction.
So into languages and business.
Correct.
And so you went off to University College Dublin.
Correct.
And you studied?
It was called Bachelor of Commerce International. And it was differentiated because you spent at least 1 year abroad at a foreign university. In my case, I studied German. So I studied at a university in a town called Aachen, which is on the Belgian-Dutch border. It was a very different form of education to what we experienced in Ireland. And it also gave us the ability to travel quite a lot across Europe. And really a fantastic year out, and kind of opened my eyes to travel and a broader education.
After college, you ended up at Goldman. So you started at Goldman.
That's right. And that was, I wouldn't say a fluke, but I started to get really focused on where I would go post-university in my final year, so my fourth year. And we were very lucky. We had, as it happens, an American professor who had a very strong view that Irish students were very high achieving, but tended not to automatically move into investment bank. They often did that further in their career. And they weren't usually a target for graduate programs. So there was a real concerted effort at that time. It was 99, 2000, where some of the banks started coming to Ireland. Some of their alum would come and kind of encourage us to apply and really have the guts, if you will, to compete against the Oxbridge and some of the homegrown talent here in the UK. And for me, it was a case of any investment bank would do. But when you get an offer from somewhere like Goldman, even my dad paid attention. And the former chair of Goldman was an Irish guy called Peter Sutherland, who was a pre-IPO partner and had made a lot of money. And, Dad and my mum were very aware of that and knew there could be success, but hard work behind that too. So yeah, I mean, I accepted the first offer I actually got, which, in hindsight was very lucky.
That's incredible. And you stayed at Goldman for 10 years. What did you start off doing there?
I started as an equity analyst. I always had interest in stocks, if you will. Like, I received some stocks on certain birthday occasions, which had performed very, very well. And really it was just a case of honing analytical skill sets. Goldman was great. They really trained us. We had a 7-week training program in New York at the outset. I also studied for qualification whilst working called the Chartered Financial Analyst, the CFA. I would argue that was probably more difficult than any university exam I took because you're working very hard and you're studying, but it's very much of an industry standard. My area of focus was actually industrials, and it's amazing how 25 years later the world moves full circle, and the hedge fund I work at today, we focus on industrials. But I'll be honest, in 2000, 2001, it wasn't a particularly sexy sector. This was a period when tech stocks were riding high to a point. So the tech team had doubled in 2 years, and the industrial guys and girls were in the corner with the boring old school companies. And, we see these cycles over time. That's where I learned how to analyse companies, balance sheets, using some of what I'd learned at university, but you very much have to learn on the job. No university degree prepares you for what once you hit the desk.
So you were an industrial analyst.
Correct.
What's an example of big industrial companies that you would have researched and
Sure.
had to know how to? I guess as an analyst, you needed to predict how they were going to perform.
Correct, absolutely. So you really have to understand the company, what it does, what it manufactures. So that's real deep research. And then it's all about understanding what makes up their revenue, their costs, and ultimately their profits, and that's how you value the company. Some of the companies would be chemical companies, capital goods companies, like truck companies, car companies. It's a broad description, but that there were some of the stocks that we were focused on.
So you spent over a decade at Goldman.
Correct.
And then you went to Citi.
Correct.
And then from Citi, you started Fifth Delta?
Correct. And, that was a wonderful 20 years. I did several jobs during that. I think you initially focus on your technical skill set, but as you grow and mature in your role, you take on more responsibility, in my case, client responsibility and so forth, and, responsible for quite significant P&Ls. Some people spend their entire career at investment banks. Other people have a real desire to go and do something more entrepreneurial. I think it really kind of depends where your path takes you. And in my case, I had actually worked with the CIO and founder of our hedge fund. Back in 2000, we were on the same grad program. So we were always told when we were in training programs, like, pay a lot of attention to the folks around you. You are peers. You either will stay here at Goldman together and or go into different companies, but you will have reason in many cases to stay in contact. And actually a small group of us still meet. We try once a quarter, realistically, maybe twice a year.
Are they bosses running some of the biggest companies and banks?
Exactly that. Some of them have very senior roles at the banks. Some have set up hedge funds like ourselves. Some have gone completely different routes and done something much more entrepreneurial. But I think when you kind of train and work that hard together, there's some degree of camaraderie. I'm not saying it's the whole class, of course not, but there's about 10 of us who very much stay in contact and look out for each other.
So I'm assuming you would put a lot of emphasis on, for young people starting out, having those early programs where
Absolutely.
They're learning to really focus on their network.
Exactly. And a lot of the programs are designed to more hone your analytical, technical skills.
Yeah.
But absolutely, I do give, even at the time, Goldman credit for making sure there was a social element to it, making sure people understood how important the peer group was. Often to ask those silly questions early in your career, how do I do X, or could you help me with this Excel or this VLOOKUP? And then, even today I have people approach me who might be thinking about launching their own funds. Can you give me some guidance on lawyers to use, or how you get an FCA registration? It really is a bit of a kind of pay it forward type situation.
So for those listening who don't even know what a hedge fund is, I was doing my research. So
Great.
Fifth Delta, when they launched, was it 2020?
Correct.
So in 2020, it was the largest amount of funds ever raised for a hedge fund, is what I read.
Well, actually,
$1.5 billion US dollars or something?
Well, so we set up the business in 2020. We had to hire over a period of about a year. So hire a team of, at the time, we had 21 people in place for the launch. And then you spend quite a lot of time marketing. Now, the unusual situation we found ourselves in, it was deepest, darkest lockdown. And normally you're on planes to the States, to Asia. You're doing lots of red eyes. You're not getting a lot of sleep. You're still trying to build a business. Instead, we spent, frankly, 18 hours a day on Zoom calls. So we'd start in the morning, as it would happen in somewhere like Australia or Asia, and then kind of travel through Europe and end up at the west coast of the US. And it was intense, but very efficient, actually. So I think we were fortunate in the fact that but the guys who launched the hedge fund had a great pedigree. They had worked and made a lot of money at Citadel, which is another large hedge fund. And also investors weren't able to do a lot for about 9 months, they couldn't go see managers, and a feeling like, okay, this is a good quality group of individuals. They're doing it the right way. We should give them some capital. So as it happens, 1.25 billion. It was that year the largest raise. It certainly wasn't the largest raise off the bat ever, actually. I was ironically involved with that at Goldman when they spun out a prop desk back in 2007. But as a single strategy specialist boutique, absolutely. And that was not what our intention was. Our intention was just to find good quality institutional investors who would take a view with us for the long term.
So I'm going to try to dumb it down and take a little step back. For those listening who aren't really sure what a hedge fund
Sure.
is, what is a hedge fund? Why is it special? What differentiates it from like a mutual fund
Sure.
or another kind of investment bank?
Sure. So if you Google hedge fund, you probably go back to about 1960s, where people started trading, various different assets. So we're talking, you trade commodities or FX, so currency, stock, fixed income bonds and the like. And the idea being that you would hedge yourself against the market. So if someone doesn't know what hedge means, it's effectively you're not wholly dependent on whether the market goes up or down. You should be making money in all seasons. And that's ultimately what our hedge fund aims to do. Some hedge funds will have more correlation with markets. So for example, some equity hedge funds have more of a directional bias. But if you buy a mutual fund, you're buying into a portfolio with maybe 50 or 80 single stocks, all long positions, i.e. the view is those companies will rise in value. Our hedge fund actually is running what we call equity market neutral. So we own an equal dollar amount of longs versus shorts. So on any given day, we shouldn't be so concerned about how the market itself is performing, whether it's up or down. We should hope that our shorts are going down, our longs are going up. Now, that doesn't happen every single day, but over the long term, that's where you want to generate your returns. So the idea of shorting is probably worth a couple of minutes as well.
Yeah. So just explain, what is a short? What is a long? What does that even mean?
Exactly.
How do I buy one?
Exactly. Well, a long ultimately is to buy something, right? And with the view it will go up in value.
So it's for long-term investors. So
Correct.
long is buying an equity stock like GE
Correct.
or Google
Correct.
that you expect will go up.
Exactly. Then the idea of shorting, and people get quite focused on, is it a bad thing to do? But the idea being, on occasion, some stocks will get very overvalued. And if you understand their revenue and their costs and their profitability, and you forecast that forward, you say, there is a point in time where this stock's price must fall because they aren't going to generate the revenue that the market expects. So in that case, you work with a prime broker, so an investment bank, back to the investment banks, and you will borrow stock from somebody who owns the stock long, and then you will put on a short position to try and profit off the fact that stock price will go down over time.
Okay, and does that affect a company?
It does not affect the company directly. Sometimes it is a sign to the company that they need to make changes, and you can have very active discussions. We do it on occasion. We will write and explain to the company, this is the reason we've gone short your stock. We think there's something wrong with your strategy, or and it can sometimes cause companies to change things or engage with you. Sometimes companies don't like short sellers and they won't engage with them, but generally we try to have a very healthy relationship with our companies.
In order to start a hedge fund, you have to get a lot of money from a lot of people saying, right, I want to invest.
Correct.
I want you to manage a minimum amount. What is that minimum amount that customers need to have to invest in a hedge fund?
Sure. I mean, there's no one answer is the honest answer.
Is there no like SEC or whatever the...
FCA?
FCA,
Yeah.
Rules on...
There is rules in respect that the investor must be, professional and or an institution. So I should certainly not be selling to my friends in terms of they need to qualify a certain amount of income, a certain financial knowledge. We took a very simplistic approach. A minimum check size of $1 million was our minimum. Some hedge funds will operate with much higher minimums than that. Very few would operate with much less because already you're into territory of possible retail investors, which is where you can't sell that to others. We're very fortunate today. 54% of our assets are actually from sovereign wealth funds. So sovereign wealth funds obviously owning big resources on behalf of, countries where they might have large natural resources and so on and so forth. And they're future-proofing the income of their economy and their people over time. And those investors tend to be very, very long term, very, very sticky. We also have some pension plan investors. We have some endowments and foundations. They're very attractive in respect that they often have really interesting missions. So whether it's a US college and trying to give bursaries back to disadvantaged kids, or it's a medical related organization that, again, are trying to give free healthcare. And it's very fulfilling, actually. In a couple of cases, on an annual basis, our investors will send us a note, and all their other investments, because we generated X million dollars or X billion dollars, we were able to fund a hospital or cancer research and so on and so forth. And that's actually very impactful for our team to understand what we're doing has some degree of tangibility, right? We're trying to make people money so that they can do good things. Now, I'm not saying every single investor is of the same ilk, but there is many different reasons why people make these investments. We do have some very high net worth individuals. We're very lucky. We have very kind of loyal long-term institutions.
How do you go about getting these people like, I'll drop $1 million and invest, and you manage this $1 million for me?
Sure.
How do you even find those people and then get them to believe that their money is safe, or it's a good risk that's well mitigated? Is that the way to say it?
Absolutely. Certainly some of the aforementioned investors will have different approach to allocating to managers. So some will not make first-time allocations. So they will say, I want this manager to operate under their own steam for at least 3 years before I allocate to them. But then there are other investors who really feel the best period to get a manager is when they're young, they're hungry, they've less assets under management. Maybe they get a bit of a deal because they've come in early. And, we found enough of those to help us get going. But it's very important that the allocator does a lot of what we call due diligence, right? Due diligence is crucial to the process, and hence why it took us about 9 months to really get over the line with quite a lot of these investors. They will go through the team's track record, what they did previously. They will go down to the wire of background checks, to make sure there's no kind of criminal or bad things in people's history. It's, very well known that often allocators, when they find things like that, won't make because to your point, they're giving you a lot of money, so they need to trust in what they're buying into. In a lot of cases, it won't be just who the founders are, it'll be the team behind them, and, is that of as good quality? Do we have good risk systems in place? We have a dedicated chief risk officer, we have a dedicated chief compliance officer, making sure that all the security around the edges are very tight. So there's really 2 forms of kind of diligence. One is the investment diligence. Actually, do we think these people can make money? And then operational, which on its own is a standalone and is very important to make sure we are belts and braces here.
Right. And I suppose you also have KYC, so the know your customer.
Correct.
Where you have to make sure the people who are investing and you're taking their money, you know exactly who they are and how they got their money.
Exactly. Some of our team have that responsibility, and then we have an administrator who takes ownership, and they're constantly running checks and lists, because as has happened even since we launched, and we haven't been caught about it, but certain countries have suddenly key individuals have become sanctioned, and they have been known to be high net worth individuals who've invested in hedge funds in the past. And that can become quite challenging, because you then need to carve out a separate amount of money that you can't do anything with, but you also can't give it back. So thankfully we didn't have that type of capital, but someone may have it unbeknownst to the fact that this will happen in the future.
What were some of the biggest challenges that you faced? I mean, because it sounds like such a huge elephant to take on is starting a hedge fund. What were some of the biggest challenges that you had to face, and how did you sort of overcome them?
In the context here again, we're in COVID. My youngest child is 3, and we're in an environment where there's still homeschooling happening. I guess the classic juggle, but actually now you're home with everyone. So first and foremost, honestly, Jen, it was getting the buy-in of the family. Right. So when I was first approached, I actually was very reticent. I just thought, this is not the right time for me. This is way bigger commitment than any of my prior jobs, right?
Because we went into lockdown in March 2020. So did you get this call right before that?
In the summer of 2020.
Okay, so we were well into seeing your house go on an hour walk.
Correct, exactly. And having... Everyone had moved back from the trading floor. Initially, I was kind of early in the move back, and I thought this is great. And then suddenly when my husband Alan's at home working and the kids are home and we get a new dog, it's pretty intense. But as it happens, if you remember that summer of 2020, we were allowed to travel a little.
Yeah.
And we actually got back to Ireland where we have family and spent an extended period there, partly working, partly vacationing. And it was in that period that I got the call. And my initial thought was like, guys, what are you doing? I mean, who launches a hedge fund in the middle of this chaos? But the certainty was there, and, you know, they wanted to do it well. And at some point we would be out of lockdown, God knows when, but we would be. And actually it was my husband, Alan, and his sister, who's a funds lawyer, she actually works with hedge funds all the time, who said, you know what, Caroline, these are really good people. You know them very well. This is an opportunity for you to kind of do what you've always thought you'd like to do, which is do something more entrepreneurial. So that was kind of the background to it. I guess it's just the long list of tasks every single day. I mean, first thing I was asked to do was set up a bank account. It was like, well, how do we even go about this? And, you know, at this stage we didn't have FCA registration, so only one bank would work with us, etc. And then it was hiring. I mean, we spent a lot of time interviewing candidates, and it wasn't just about the skill set. The skill set's important, but the right culture, because it was always going to be a small firm. And I won't say everyone at an investment bank is pleasant all the time. You can kind of hide sometimes in that. When you're a team of, you know, mid-teens people sitting in London, all on the same trading floor with nowhere to hide, you really have to make sure you find the right people. So that was very time consuming. And also trying to get people to commit, because again, no one had certainty. Everyone was in this home working environment. The idea that, you know, we'd even have an office at some point seemed like a stretch. But you know, between our network and you know, people we knew, we managed to get some really good people who are still with us today. But I guess the toughest thing of all is, how do you raise the money, right? Exactly what we spoke about earlier. How do you focus the time? And I'm all about process, and I just had to be very disciplined with all of the incoming, the interest that we were getting, because again, this was a very well pedigreed team. People were very excited about it, and trying to decipher, okay, who's here to have a quick look versus who's serious, and, you know, without ever thinking about the long term and saying, oh, if we don't talk to this investor, they might never invest with us in the long term. So I took a lot of that on in the first instance, pre-meet and introductory calls by myself, to really lay the ground of, this is what our product is. If you don't like certain elements, maybe don't spend the time doing due diligence. So it was really trying to efficiently manage everyone's time. So I did about 110 of these pre-meet type calls on my own. I had the guys meet 55 and of that 55, 30 became quite serious, and of that 30, eventually 16 joined us. So it's actually a pretty impressive hit rate by historic standards of how you kind of market one of these vehicles. But again, I think, you know, time was in our favor, had a good background, and really showed proper commitment.
So let me go back slightly, just a few steps, to something you said before. So just finding the right team, looking for this kind of opportunity. What is it that you're looking for? Or is it a matter of knowing who the leaders are and who's going to work personality-wise with those leaders?
Well, we certainly had, you know, specific technical skills we wanted. So one thing I always emphasize, we're very tech savvy and we use a lot of data. And today we actually have 6 data engineers/analysts. And most of those have engineering backgrounds, but have some inkling of an interest in finance. And we took quite a few of them out of industry. So, you know, whether it's Schlumberger, the oil company, or McKinsey's Quantum Black Group, or Amazon, right? So we had folks who were really smart data engineers, but had a little bit of interest in finance. And we've brought them into an environment where they can create their own applications, they own it completely, versus just being a little cog in a wheel at a huge multinational organization. So in that team, we needed, obviously, the technical skills were essential, and we tested them, but really someone who had this eye for finance and wanted to take ownership of their own kind of application. So that was something, you know, not every engineer has that.
Yeah. So it was loving data, understanding data, knowing how to find the gold in the data.
Correct.
And have the passion for finance.
Correct, exactly. And have some degree of interest in the sectors that we cover. A big portion is the whole auto industry. So, you know, having some degree of background in that. And then, you know, people like our chief risk officer, he had worked with the guys before. He, you know, was beyond a kind of stick and carrot guy, right? He was very engaged in improving processes and systems all of the time, continuously, right? Innovation, and that's what we drive forward. You don't come in and do your job every day, you try and do it better every day. And that culture of, give it a shot. And, it's almost like a tech firm at some stages, we're using AI before everyone was talking about it, right? But not really making a foot.
What aspect of AI do you use? There's like 5 different major streams.
What we try to use AI for is to abstract away manual process. And in the first role I started in my career, which was an Excel-based research analyst, to some extent, certain people who do this job today, the role has not evolved in 25 years. Putting in numbers, it's very, very
Still
manual.
in Excel.
Correctly, it's still in Excel. And, there's a place for Excel, but, we've stepped it up beyond that. And, there's a way of very quickly digesting transcripts when companies come out with earnings. We have a bot that does that. We've now released it. It does it in less than a minute. It used to take an analyst 2 hours of their time. So, again, there's a certain format we want it from, and we've tested it over many quarters. But, what does that free up the analyst to do to become even more subject matter expert in the companies they know and understand? Or even something as the newsletter we send to our investors. When we get to the final stage of kind of about 10 pages of nice prose and talking about stock ideas, just that sort of last piece of finessing how it reads, we used to have a copy editor do that. We tried it through ChatGPT. It did a great job. We don't need the copy editor anymore. So, just incremental steps that free up time for folks to be more efficient.
Yeah. So that brings me to the AI question. How do you see AI changing the framework? Because in the old days, before real AI, I mean, we still had data.
Sure.
You could track trends and patterns and do some prediction analysis.
Sure.
But now there's the mind of AI,
Yes,
which can learn from that data, create new questions, and discover things you didn't even know you needed to look at or look for and see patterns. If everyone has access to deep learning algorithms and every other aspect of AI, where is the competitive edge? If all the banks can be using AI, where do you see the future going?
Yeah, I mean, we always go back to, what are we here to do? We're here to try and predict share prices by understanding the revenue of the companies and their costs. If we can have access to data sets and AI can help us be more precise in that game plan, which is our goal, then we should win over the long term. And that's really what we're trying to achieve. We don't want the AI to pick the stocks, right?
Of course.
We have 2 very competent individuals who we believe ultimately, fundamentally, they are picking the stocks.
Yeah.
But the AI and the data can help along the way to make us better in terms of understanding those trends and where the future is going.
Do you think it'll get even more razor sharp competitive across investment banks and hedge funds because everyone has this access to kind of, I guess it allows humans, AI allows humans to be smarter?
It's definitely a game changer, but I think it'll depend on the strategy and kind of what it's specifically used for. I mean, what you don't want is incorrect assumptions coming out. We very much use it within a kind of controlled framework.
Yeah.
Tried and tested. You need to have very strong kind of policies around the use of it, who's allowed to use it, etc. So I just think, absolutely embrace it. It's game changing in terms of improving efficiencies, but just know what your organization is set up to achieve and make sure you kind of stick within that framework.
Yeah, you still need the humans in charge.
I hope so.
How do you navigate in a world where you are a vast minority? I'm sure it's easier at your level, right? The higher up you go on the ladder, it's sort of more easy because you have more power. But even so, getting there.
Sure, it's a topic that's discussed a lot, and it's kind of interesting with this DEI approach that has now seemed to have done a 360 since the recent elections. 25 years ago, when I started, the analyst intake, the graduate intake, was genuinely 50-50. And even then, there was an acceptance that it must be and it should be. And the problem starts happening, to your very point, people become analysts and they become associates, and then you start losing people at the kind of associate VP director level, which they never make it to managing director or partner. And a lot of that has to do with, to your point, family life, domestic life.
Hi, it's Jennifer Devine, and you're listening to the Successful podcast. Thank you so much for being here. It means a lot to me. If you're liking the content, let me know by hitting the like button. And if you haven't already, please subscribe, and then you won't miss out on any future episodes. And if there's someone you think could benefit from this information, or watching and listening and finding inspirational, please share it with them. Now, let's get back to the show.
So when I started 25 years ago, there was a very concerted effort to try and have a 50-50 kind of male-female analyst intake. And that probably continued throughout my career. Sometimes it was even a little bit more biased to have more than 50% females, right? Because what they were finding was, as they progressed kind of in that 5 to 10 year into the role, they were starting to lose people. Some of it was family related, not all of it. Some people just, decided the industry wasn't for them and can take up to a year off. I personally never did, and I'm being very honest. I took 6 months with 2 and 4.5 months with 1, because I felt with a sort of high-end front office role, if I took a year out, it would be hard to get back in, and a sense of, was I really showing my commitment, if you will? Now, in hindsight, maybe that was the wrong thing to do, but for me at the time, I felt it was the right thing to do. But I always hark back to something that was actually explained to me when I was a kind of mid-level associate, so about 25, 26, where the CEO of one of these banks actually hosted an afternoon tea with us as a group of kind of mid-level females trying to address this issue. And he highlighted his wife still worked, she was a lawyer, and the only way they could make it work with family was to pay for help. The commentary was kind of taken well by some and not so well by others, because that comes at a cost. But the view being, in order to make yourself successful, you have to help yourself with, whether it's a cleaner, even if you're just living in a 2-bed flat and you don't want to spend your whole weekend cleaning because you need some downtime, or once you have a family, if you can have someone come into the house, and then it helps you out. And I really took that advice on. Short term it can be more financially challenging, but long term I do think, and I have seen, it can genuinely pay off. And again, it's a very direct discussion point, but I think also we've moved on, right? COVID, I've talked about a lot because of where we launched our hedge fund, but it has given a lot more flexibility to both the man and the woman. I mean, my husband would genuinely say, if he ever wanted to go to this Christmas play or do X or Y, he works in the construction industry, very male dominated, but really a sense of, why would you be taking a morning off to do that? Like, that is the expectation the wife does. Today, that is not the case. It's very much equal for everyone, and, sharing the family burden and so forth. So I think, society has moved forward to some extent, and that's some of the benefits of the flexibility of people being able to work from home. And culturally, I've definitely seen, when I look at former colleagues at these large banks, there's definitely a more acceptance that, as a man, you can equally put your hand up and say, I must attend this event, or I have to do such and such. But it doesn't get away from the fact that women are still in the minority at the very senior levels.
Yeah, across the board, pretty much.
Across the board.
So you worked in New York as well for Goldman, or were you always based in London?
Always based in London, but travelled a huge amount, whether that was to Asia, Middle East, and I would spend stints in New York. I had bosses based in New York, so, back and forth, doing the Friday red eye, etc.
4 months, by New York standards or American standards, 4 months is a very long time to be able to stay with your baby. I remember having bosses who went on maternity leave and they were back in 2 weeks.
Yes.
So it's a very different world over there.
It is a very different world.
In Europe, all across Europe.
Absolutely.
It's really fortunate.
Yeah.
So do you think that's probably the best thing that came out of COVID is companies saw that, wait, people can work from home? Because, in the 90s, we just laugh. We'd be like, oh, yeah, they're working from home.
Yeah. Oh, 100%. There were periods where, I would have bosses say, or bosses say, if you need a bit of flexibility, do the odd day from home. But one, we didn't have the right technology support.
Yeah, that's true.
Right?
Dial up.
How often did you just get knocked off the internet? Yeah. So inefficient. So, what was the point?
Yeah.
But, old school bosses that felt if you worked in the trading floor, you had to be tied to your desk from 7 a.m. until 7 p.m, and that's the only way it worked. Even when I started to see some of the heads of trading desks be sent home after Italian ski holidays in 2020, everyone was like, how's this going to work? Like, the head of the desk isn't here. They've to spend 2 weeks in purgatory at home with a dial-up phone and a laptop, right?
Yeah.
And actually, I would say it took the banks a little bit longer than other industries actually to get the technology set up exactly where it needed to be for everyone, right? For the key people, they clearly had them coming in still.
Can they do trading floor level trading, traditional trading floor level trading from home today?
Yes, but I think a lot of the supervision of that still involved very senior managers sitting on the trading floor at HQ. And, you know, there was definitely sign off and dispensation because there was an element of financial services professionals being necessary workers, right? In respect that, you know, they needed to be able to travel and move safely to and from offices, but limit and decide who those people were.
So was your sort of trajectory to running a hedge fund, it started as an analyst, and then you said you played many different roles. Can you just give me the bird's eye view of sort of how you stepped from major position to major position?
Sure. So the first change I made was actually moving into hedge funds in 2005, so 5 years in. And
At Goldman.
Correct. And there was a period of significant growth after the dot-com boom where the equity market really fell quite hard, and a lot of more institutional type investors, pension plans, etc., had a lot of assets and equities, and suddenly, you know, they look like they're not meeting their pension liabilities. And the idea of diversifying and moving into alternative assets, which shouldn't be correlated with markets, would be good. So the first step forward was something called a fund of hedge fund. So these pension plans would say, you know, we're no experts in vol trading or macro or CTA. Let's hire people who are. So Goldman had a team who did this and, you know, ran about $20 billion. So that was my first foray where I moved out of equities alone into understanding different asset classes. And frankly, you know, money was flowing into hedge funds then. We were deploying a lot of capital, but it was still, you know, moving from a bit of a cottage industry into maturing a little bit. A couple of years into that as well, something called, we're going to get a bit technical here, so apologies, the Volcker rule came out in the US.
The Volcker.
Volcker. So it was a rule that basically the prop trading activities, proprietary trading activities that took place for a long time in banks were effectively outlawed because the view was too much risk was in them and they wanted the banks just to focus on more of the client flow business. So in that case, Goldman and many other banks had very talented individuals sitting in these seats that they wanted to retain. In order to do that, they could spin them into their own hedge fund, into their asset management business. So I was involved in that in kind of 07, 08, 09, alongside just other alternative products. So we would often offer investments in private companies. I mean, Facebook was interesting, right? This was kind of 09, 10. People couldn't get, you know, enough of access to kind of pre-IPO Facebook, if you will. So kind of, you know, back to the public equity days, but a bit of private as well. So that was all at my time at kind of Goldman in that alternative sphere. And then when I made the move to Citi, it actually brought me back to the trading floor. And I worked in a role called prime finance sales, effectively prime brokerage. So offering the ability to use leverage and shorting, which I talked about earlier, that hedge funds use. So actually I got very close to working with very large hedge funds, some of which are, you know, some of the biggest in the world today. And whilst I couldn't understand how things operated fully internally, I now found myself 20 years later having helped allocate money to hedge funds, help spin hedge funds out of prop desks into an asset management business, and also service hedge funds in what they needed the most, which was execution and financing capabilities. So when it came to actually helping to set one up, I had quite a 360 understanding of many of the things that hedge funds needed day to day. In a way, it was a bit of a very unplanned journey, but, you know, forks in the road that kind of ironically brought me back to my roots, which was being an equity analyst. Now, today I don't pick the equities, but I can talk very comfortably about why we own positions in, you know, certain car companies or certain semi-technology companies, etc.
And then you got poached. Is that the right word?
Ish.
By a former colleague from your early days at Goldman.
Early days, exactly.
Okay,
exactly.
So tell me how that jump happened.
Well, effectively, when Niall and Theo, who've launched the hedge funds, came together or reunited, they'd worked together for a long time. They said, okay, what are we good at? And we're really good at investing. But there's a lot of things that you need to have to support that. So I often say to my kids, they will say to me, what's your role, Mum? How do you explain what you do? I say, I allow Niallty and the investment team to do what they need to do every day, which is analyse stocks and make good investment decisions. And the rest of the team on the non-investment side take care of everything else. So we take care of the investors, the counterparts, the legal, the compliance, operationals, financing, all of those other things that make the day-to-day happen.
How do you define what you do to someone who's...
Yeah, I mean, I try and define it exactly in those words. So trying to conduct the orchestra and make the music happen, shall we say.
Oh, I like that analogy. What sort of advice would you give young people, university graduates, even people in high school or secondary school or sixth form? I'm trying to get both covered,
Yes, absolutely.
What advice would you give them if they're like, oh, I want to be an investment banker, I want to be in hedge fund, I want to get into banking? What would you tell them?
Sure. I wouldn't obsess too much about what you study at university.
Okay.
If I look at teams I've worked with over the years, yes, plenty of people like me came from kind of economics, commerce, finance backgrounds, but we've plenty of engineers, we've plenty of folks who have studied classics, right? I think at the end of the day, it's going to be about one, strong analytical skills in whatever shape that takes. So you could have been trained as a lawyer, and that brings certain skills to the table. You clearly need to have passion and want to work hard, right? Like, this doesn't come in a 9 to 5.
Yeah.
It really doesn't. And, you can see, even with my own kids now, do they really have the mentality I had 25 years ago? I hope they do. But, not sure they will. And
do you mean mentality or do you mean hunger?
Hunger is, I guess, hunger, exactly. Hunger, perhaps. And listen, I think things have moved forward a little bit, whereas certainly it was a culture from our day, back in the day, that, the seniors did it, so you got to do it, right? And you got to hope with all these innovations and AI and everything else. I mean, that role, some of the tasks we did back then, updating PowerPoints and the like, I mean, all of that should be abstracted away, and I'd be very disappointed if it wasn't, because I don't know how we've evolved. Really, it's, having that passion and that hunger.
It's such an important point that you mentioned. Like, when I grew up in business, and anything you did, we worked morning, noon, night, weekends. On holidays.
Yes.
And I'm happy to hear it's gotten slightly better, but there is no 9 to 5 when you're learning. In your 20s, there's no 9 to 5 where your peers will respect you. Because to show your passion, right?
Exactly.
You have to go above and beyond, work a little harder, show that you're keen.
Absolutely. And to my point earlier, no one trains you for the job, probably in any job, really. But so you have to learn by osmosis. And, there was a period when, there was this whole debate about going back to work, how many days in the office, and so on and so forth. For me and for us, because we had a relatively young team who hadn't worked together for that long, we did want them to get back to the office pretty quickly, 5 days a week. But the caveat in the background is always you have a full homework setup. It's really top end. So when you need the flex, you can absolutely have the flex. But we're not going down to this. We're not in on Fridays and Mondays. This office will be operating the whole time.
Yeah.
And it will benefit all of you because you're going to learn from each other. You're going to learn from us. It's all a very good learning process.
I like what you said about you don't have to study economics, math, finance in university. Follow your passion.
Correct. Absolutely.
Stay keen.
Stay
Keep
keen.
an analytical mind.
Absolutely. And it's no harm if you have, a little bit of interest in finance on the side.
Yeah.
And, you might invest in a couple of stocks, or you're part of the university investment club. You often feel people are very passionate on that side of things. But there's no one path into an investment bank. I mean, I've even seen, qualified doctors make the move to become analysts to cover healthcare companies. I mean, it makes me sad because we could do with really good doctors, but, where that role wasn't fulfilling enough for them and they wanted to use their expertise in another manner, shall we say.
So for those kids, it seems like either we have become more evolved as society, giving people letters like ADHD, ADD, but it seems like all those numbers are going up. And some people blame screens, right? The inability to focus for long periods of time. There's more young people with ADHD. Smart, bright kids who can't seem to focus for an hour on something without diversion. Is there room for kids like that in the banking world, in the investment banking world? Do you see successful adults in your industry who sort of have ADHD and use it as their superpower in some way?
Well, it's often argued that, a lot of people to do this must be slightly off the spectrum, like being quite honest. And, certainly some people I would really respect in terms of their ability to generate amazing investment returns have those traits, right? Now, often they haven't been the easiest people to work with, but when they assemble the right team over time around them, it can work really, really well. So, there's always a place for them. And the banks are trying to do more on neurodiversity, actually. Which is a new one for me, actually. This was never spoken about when I started. It was all about the normal diversity, whether it was gender, race, religion, etc. But this is being recognised and accepted the same way, I guess, mental health is. But I'm not going to sit here and say there's a certain quota to attract certain candidates. But I would say, people who naturally are very kind of quantitatively minded, can have elements of some of that anyway.
Do you need to be an A student coming out of high school or university to be on a path to a successful investment banking career?
I don't think you always need to be. It's tough, right? The competition is high. But there isn't just the straight up graduate path. Sometimes some of the best talent has come through, what we call operational back office roles, right? Where they've been more of a support function, but have supported a trading desk. The trading desk think actually these are really bright people, and they've been able to kind of move to what's termed the front office. So that path is well trodden and continues to be so. And let's be honest, for the reasons you mentioned earlier, some folks aren't mature enough perhaps at the age of 18 to get those scores, to get to the best universities.
Yeah.
Not to say they don't have the ability.
Right, of course.
But so the path might veer and it can change and so forth. Also, just to sort of flag, hedge funds per se don't tend to run graduate programs because they're usually not big enough to support them. But I'm aware and do know of some hedge funds that have actually adopted an apprenticeship program where they're getting people straight out of school. They're spending part-time in education and part-time at the hedge fund training up, usually in more kind of IT-related type roles. But it's been a fantastic model for this.
How do kids get involved in that? Usually the company's reaching out to a university?
Correct. Absolutely. Yeah, absolutely. And just kind of word of mouth. And, there's plenty of organisations out there that will, help support these type of programs, shall we say.
What do you find most passionate and exciting about what you do?
I'm a bit of a nerd, but I love markets, right? News happens every day, stocks move on the back of that news. Yeah, I guess that's why I'm still involved 25 years later.
What else are you passionate about besides finance and family? Like unwind. You seem very calm and relaxed.
Right.
But it's a high stress, fast moving industry. So I'm just assuming that you have some really stressful, pressing days. How do you decompress?
I think health and fitness is key, and we very much embrace it. Everyone at our firm has gym membership. It's very close to the office. We encourage people, if they want to go during the day, they absolutely should, as long as they get their jobs done. So, a trader has a different role and a different schedule to maybe myself. So to the extent possible, if I can get to the gym 4 days a week, some of that includes maybe a Pilates or a yoga alongside something a bit more kind of active on the cardio side. I used to run. I've kind of stopped for a period, but I've done a couple of marathons. And, back when I was in what I felt was quite highly stressful investment banking, that was a great, just get out and hit the pavement and for an hour or two. And that took us traveling a bit, which is quite nice. You go somewhere for a weekend, run a half marathon, check it out. Ran a marathon in New York. So I do intend to try and get back into that.
Were you a runner in high school, college?
Not so much, no. I really picked it up more in my 20s. I've done other things like when I had a milestone birthday, got to the top of Kilimanjaro for Great Ormond Street Children's Hospital, got dragged two of my friends along and raised a lot of capital. So it's primarily around those sort of things. Love food, love wine, like to read when I can. Probably a little bit too more focused on kind of Netflix series at the moment, but just genuine kind of things to unwind.
Yeah.
But it's busy. I mean, I can't say there's a ton of free time, but a couple of nice trips every year, see new places. That's always eye-opening and really kind of takes you away from London and the markets and so forth.
If you had a template of success that you think is your sort of golden nugget that helps you stay on the up and up, what would it be? Is it a mindset, a way of thinking? Is it just a focus on what's at hand?
Yeah, I think it has to be beyond what's at hand. I mean, I've definitely had times in my career where the to-do list has been enormous and very stressful because you can never get to the end of it. And, having forged this path for many years, of course, it's important to have a to-do list, but I think you're always trying to think about improvement and innovation, how to get better every day in your job and your task and your role with your people. If you stand still, you're not moving forward in this industry. So you kind of have to be, I'm not saying every day there's an incrementally new step in the process, but you have to try and step back and be more strategic in your thinking.
And what's next for you after the hedge fund, or will you be doing this for the unforeseeable future?
Frankly, board roles. So I have historically had 2 pro bono roles. I was trustee and then chair of trustees of a charity based in North London called I Can Dance. Effectively, it supports disabled young people to the age of 25 through dance. And that was very rewarding. I had to step back after 6 years of doing that, but again, very challenging during the COVID period because the whole program is around one-to-one support, and clearly that couldn't happen. So we had to move online, which wasn't the same experience. But also seeing, frankly, the trials and tribulations charities have from a kind of fundraising and capital financing perspective, and just trying to give a little bit of my commercial background to that. I was also involved in an Irish business school, not the one I went to, but as a member of an international advisory board, again, getting insight into academia, which I never had seen before, was eye-opening, quite frankly.
In what way?
They do great work, but again, sometimes these businesses aren't very commercially minded. So again, kind of using that business mindset in my mind, and actually the advisory board, was a lot of people who had been somewhat successful in business, helping them kind of think about, attract more foreign students, bring on more sort of postgraduate programs, like higher margin type businesses, while staying true to the teaching profession. Away from the hedge fund, which is very public market focused, I actually am a non-exec of a private equity firm, which is a newer role for me, a lot of learning, and goes back to what success looks like. It's actually continuously challenging myself. I can't sit on 10 boards currently. I don't have the time, but trying to pick 1 or 2 that take me out of the day-to-day of what I do, but I can use some of my skills and bring something new to the table. So, yeah, I think I will continue to try and expand that portfolio over time but it doesn't have to be finance, right? I would like to do some more charity work again for charities that
you believe
mean
in.
a lot. Exactly.
Oh, that's so nice.
Yeah.
I love that. It's very inspiring.
Yeah.
I always think we have mentors. Sometimes it's our parents, our family, the voices that we hear when we're far away from home. What's the best advice your mom or dad ever gave you? Or maybe a mentor that comes up for you again and again?
I think one is just work ethic. Nothing's going to be handed to you on a plate. It wasn't handed to me, and work hard for it. And I'm trying to, say the same to my children, right? I will expect when Logan's 16, he goes out and gets a part-time job, right? That he understands the value of hard work and money, and that he does live in a pretty privileged existence living in the southeast of England as he does. And the same for the other 2. So I think hard work, but also, treat people fairly, because as big as our industry feels like, it's actually very small. And if you're not a very nice individual, it comes back to haunt you at some point, whether it's people who are junior to you who suddenly become senior to you and have a bit of a grudge, or, people who you might have co-worked with, then you're trying to pitch them for business, so on and so forth. It does have a habit of catching up with you. And I've seen it time and again where, people have been very successful but not very nice with it. And, over time it catches up. So just try and be a good person. Try to be true to yourself. Actually, being true to yourself is key.
That is a good message. That's a great message. I agree. Also, the truth always reveals itself, whether it's about people or things or situations.
Exactly.
So how do you, and this is just a selfish question I have for myself because I have teenagers who have, like many of my friends and people I know, and probably yourself as well, they have privileges and access that I didn't grow up with, that we didn't grow up with. We had to work so hard for. And also the world was a different time. You know, now they have access that we, you know, just through having a phone.
Correct.
That alone gives you access to knowledge and
Correct.
a world of knowledge that we never had. How do you get your children to have a similar work ethic or hunger when they always have had a full plate of food?
Yes, exactly. No, you know, we grapple with it all the time, right? And you try and think, what is good parenting, and you know, how much screen time should they really have, and when do you stop fighting the fight because they say that everything's on the screen for their schoolwork and so forth. You know, I think just trying to bring it, like, just try and encourage them to be good, decent human beings. Hope that the people they spend a lot of time with away from the family, being their friends, are good people. I mean, it's hard to tell a 15-year-old you must be friends with this person or not with that person.
Yeah.
But just have a kind of some understanding. My husband always says, especially having boys of the age we have, are 12 and 15, 14, almost 15, keep talking to them, right? Because if you don't, they will head to their bedrooms and be on their phones. And actually, I personally find the best time that I get time with them is driving them to football or rugby training or going to football or rugby matches, because this concept of you're sitting side by side, no confrontation, and it just naturally comes. And we have some of our best discussions then. So just being able to try and take the time, even though you take all your weekend taxiing around. So, and actually trying them to make sure they keep encouraging them with sports. Because I do think team sports are very important. It was something we always focused on, hiring graduates, hiring interns. Someone, you know, isn't just a one kind of, you know, like they have, if you work in a business, most businesses.
Yeah, you have to work on a team.
Correct. And I think the true sign of that is sport. You don't have to be the best team in the world.
No, of course.
But just your ability to get along with folks.
Yeah, know how to be any member on the team.
Exactly. And, you know, luckily they haven't wanted to give up sports, and we absolutely would discourage if that was the case. And in fact, with my daughter, it looks like she wants to be more of a swimmer, which is a bit of a solo sport.
Yeah.
So we're talking about, would you join a club or a squad? And, you know,
To
just
get the team
correct. Yeah, absolutely. So, so yeah, I think just trying to get them away from the screens at some point is good.
Get them talking to you as well as their friends,
Yes.
not through the screen.
Exactly.
Yeah, we try to do a bit of the same as well, and that's really good advice.
And, you know, when you do take those nice trips, like just, you know, we will say there's no phones at meal times. Like, we're having family dinner together now. You know, we didn't come all the way to some nice place to sit on our phones. And when it's hard, I mean, you know, I have US investors, and it's, you know, they're still awake when, you know, we're doing this and stuff's coming in, but we also have to lead by example. And sometimes I'm really bad at it. It's like, well, Mum, you're telling us not to, but you're always on it. Yeah. Right?
Yeah.
I'm like, but it's for work. And they're like, well, ours is for school.
I've had to teach my children, there's a hierarchy, and parents sometimes seem like we're hypocrites, but there are a different set of rules.
Yes.
For adults.
Yes.
You know? Like for a growing brain and body.
Yeah.
Right? You can have a glass of wine as a grown adult.
Yes, exactly. No, it's very true. It's very true. But I do feel like, I wouldn't say we're devoid of phones always at the meal time, but
having boundaries.
Correct.
Yeah.
Correct.
The best advice your parents ever gave you, it was really through observation. They were just really hardworking.
Yes.
So the work ethic.
The work ethic, and just that, you know, be a good person and stay true to yourself.
Is there any other questions you think I should be asking that would help, or things that you get a lot that people ask you that you think are really important to get out there to answer, to have answered?
You know, it would be great to get continuously good, ambitious, smart folks into the industry. And, you know, there is times when the industry worries about that as well, right? There's a lot of competing factors, whether it's technology companies, you know, banks are still, and financial institutions, you know, seen as a bit conservative versus, you know, what you might get at a tech company, right? So there has been a sense of, fighting that talent war, if you will.
Yeah. So because of the insurgence on AI that has been moving so rapidly, I mean, it's almost every week that I learn about a new AI-based app that can help me do something more efficiently in my life. Would you say that for young people wanting to get into this field, to also have an understanding, even if it's not a formal education,
Yeah.
I don't know what universities are teaching, how to design or build programs, tech programs, taking advantage of the various 5 streams of artificial intelligence. But is that something that is sort of emerging that you're now looking for in young candidates? So not just like the quantitative, analytical minds, understanding the business and profitability, but also an ability to do something with AI technically.
Sure. I think just tech savviness is probably key. And I was doing some kind of benchmarking for us around our team and, where demand is for different jobs and what the competition is. And, at this breakfast, this particular kind of headhunting group we're talking about, almost every role they discussed, whether it was an operations person or a trader, the demand for someone with more tech skills is higher now than it's ever been.
So when you say tech skills, is that a programmer?
It could be.
Or is that, yeah.
Yeah, it could be. It's just someone who has certainly more tech savviness than I did when I started. And sometimes people are doing it on their own, teaching themselves. It used to be Python was a great thing to have, right?
Yeah.
And that was certainly a baseline entry request we would have for folks. But yeah, just being interested and aware. But I think quite a lot of young people are.
But naturally.
Correct.
Yeah.
Correct.
I mean,
Certainly.
5-year-olds know how to navigate my phone better
Well,
than I do.
exactly. Yeah, absolutely. Right. And, that is exactly how it is. And it's just they're growing up in that environment. Whereas, it's if you wanted to do it in the past, you'd have to go do a specific computer science degree.
Yeah, that's right. It is. Yeah, it's more accessible.
Correct.
And easier to learn as well. I mean,
Yes.
old programming was at a DOS prompt.
Yes,
you know?
exactly. Exactly.
And now
Exactly.
it's very Windows based and graphical.
Yeah.
There's a graphical aspect to it. And AI can create
Correct.
can create programs.
Yeah, absolutely.
Well, this has been so good. Thank you so much for coming on the
Of course.
Successful
Thank you,
podcast.
Jen.
Yes, and maybe we'll have a follow-up once I'm live. We can do like a little go live and get people to call in and ask questions.
Oh, brilliant.
That's
Live
my
on the...
big dream, to be able to do
amazing.
go lives and allow like people from the internet to ask questions and interact with the person in front of them, maybe.
Excellent. Well,
Yeah.
look forward to that. The next evolution.
Yeah. Thank you so much.
Thank
This
you.
was so good. I really appreciate it.
Absolute pleasure.
Thanks for listening to this episode of the Successfou podcast. Every story I share is a reminder that success isn't handed out. It's built by people who are brave enough to dream and bold enough to follow that dream. People who keep going, who learn and keep learning, and who lead with the heart. If something in this episode sparks something in you, pass it on to someone you care about. I'm Jennifer Devine, and I'll be back next week with more real stories and real tools and templates of success, real conversations to help you build the life you're here to live. Thanks for joining me.